Hi, this is Zena Krogadal, Real Estate Warriors. Uh, we're jumping back on again. I had some technical issues with the other video prior, so I wanted to go ahead and just redo it. So that way you have it to watch in case you can't catch the live stream, that you can do the replay. So anyways, I hope you had a wonderful Christmas. We certainly did. We got to hang out with our daughter and her husband and his family, and it was a wonderful time. So I hope you all got to enjoy your time with your family. So today we are going to be talking about what's going on with the markets. I mean, are we headed for a housing market crash? Everybody wants to know. So let me put on my slide deck here. I think I've got this. Let me add this to the stream. Okay, there we go. And if you hop on here, I would love for you to give me a shout out or thumbs up or something to let me know that you're here. And if you have any questions along the way, please be sure to put it in the chat box so that I can get your questions answered. And of course, you can always reach out to me at any time, and I would love to chat with you and answer your questions. So we'll go ahead and get started without further ado. So the 2023 housing market forecast, we're going to talk about what's all happening. And, of course, included in what our talk is, we're going to talk about home prices, the context, the experts, and we're going to look at the numbers. So we want to look at the facts because not everybody has been getting the facts. And of course, the headlines have all been saying all sorts of different things. And I just want you to have the accurate information. So here we go. So there are a lot of people who are wondering, are we headed for a housing market crash? Are we? So out of a LendingTree consumer survey, we see that 41% of Americans believe that the housing market crash will be in the next 12 months. And 72% of who believe the housing market will crash think it'll be as bad or worse than the 2008 housing market collapse. And then 58% of the group that expects a housing crash in the next year say they're postponing housing related changes. So tell me, where do you fall in this? Do you fall in any of these categories? Why? Why not? Love to hear from you. Let me know. It's very interesting to see the survey and see where everybody is at and what they're thinking. And certainly as I meet people, even in person, this seems to be pretty accurate consensus that there are a lot of people who are thinking that we are heading for a housing market crash and it's going to be just as bad as 2008. So can you believe that it was about 15 years ago that we had a market crash? I mean, around about that time. And so today is nothing like it, nothing like 15 years ago. And let's go over why that is the case. So job cuts, is back in 15 years ago was 8 million. So there were 8 million job cuts, and we don't have any now. We seem to be doing okay as far as job availability. Total jobs, household survey says that there was 138 million total jobs that were available 15 years ago. And today we have 158 million. So we actually have more jobs available today than we had before. So the other thing that we had 15 years ago was subprime loans. I think we all know what that means. What does subprime loans mean? Well, they were basically loans that were given to just about anybody that had a pulse, pretty much. There wasn't a whole lot of criteria or qualifications, it seemed like. So anyways, I'm getting deeper into that technicality, but there's really no need to. But basically what you need to know is that we virtually have none today. We don't have any subprime loans. So our lending criteria is much better, and people aren't able to get a loan unless they can qualify with their income and their debt to income ratio or the residual income or whatever it is, whatever type of loan that they're looking at, they have to qualify. So much more stringent on what is happening today. So let me just kind of peek over here real quick. I want to make sure I'm not missing anything at all here. And just in case somebody jumps on, I don't want to miss. So, all right. So new construction back in 15 years ago, it was 7.65 million. And today we are at 4.6 million. What a big difference, right? Huge difference. So we don't have as many new construction going on for new homes. And the inventory on the market back in 2008, we had 3.8 to 4 million. And today we have only 1 to 1.2 million. These are the national numbers. That's a drastic difference. Wouldn't you agree? That's a big difference on the, how much inventory there actually is. And mortgage delinquency back in 2008, we had 10.1%. Today we have 3.6%. And homes in foreclosure, back then we had 4.6%. And today we have 0.6%. So those are the numbers, just the national numbers. And let's get to the next slide. So of course, this is the kind of headlines you probably have been seeing all over the internet and news outlets, that we have a housing market crash coming and it's similar circumstances as 15 years ago. Do you think that that really is the case? Why or why not? 15 years ago, similar circumstances. So let's break it down. Let's take a look and see, if it is the similar circumstances. Okay, so let's take a look. So the home price forecast for 2023, I'm going to backtrack just a little bit here. The home prices forecasted for 2023, as you can see from seven different sources, they're all different. And so Realtor.com says, 5.4%. And HPES says 2.6%, MBA says 0.7%, NAR says 0.3%, Freddie Mac says 0.2%, Fannie Mae says 1.5%, and Zelman says let me back up. Freddie Mac says negative 0.2%, Fannie Mae says negative 1.5%, and Zelman says negative 5.1% for the home prices forecasted to increase. And if we average all 7 of those sources up, we actually come up with a 0.3%. So reality is that we're probably not going to see a whole lot of price change in your home over the next year. So of course, that can change depending on some variables that we're going to talk about. But that is what the projections are for home prices. Again, if you have any questions at all, please let me know, and let me know that you're here. And if you'd like, you could share the video so that your friends and family can also get this market update. I do think it's very important for us to all be in the know and to be educated on it. So, okay, so foreclosures. Foreclosures are up, but they're actually in the record lows. So if you take a look at this graph, you can see that at the peak of our last housing crash, we had 2 million foreclosures. And today, in the third quarter of 2022, we have 88,000. So yes, we have some foreclosures, but it's nowhere near what it was back in 2008, back 15 years ago. So the rate of the U.S. house price growth has substantially decelerated. We see that. And the deceleration is widespread, with about 1/3 of all states and metropolitan statistical areas registering annual growth below 10%. So here's some other numbers here. As of September of 2022, year-on-year house appreciation, according to the Federal Housing Finance Agency, we had a 11% appreciation. CoreLogic said we had 11.4% appreciation, and S&P says we had a 10.6% appreciation. So we definitely saw some appreciation in our homes, anywhere from 10 to 11%, it looks like. And again, also depended on the area that you are in. as to what that appreciation was. So CoreLogic Home Price Insights percent change year over year. So as we take a look at this graph, I want you to note that the average back before the pandemic, the average price increase or price appreciation was at 3.8%. That was the average prior to the pandemic. And so as you can see with this graph, we slowly went up and then we peaked and now we are slowly coming back down. But even at our low level right now, we're still far above that 3.8 average. So most homeowners have quite a bit of equity in their home still. And have home values hit bottom? I mean, we see the news just flashing that home prices are falling and the market is crashing. And so I just want you to take a look at this graph as well. So, and this is for 2022. So as you can see in January, we were at 1.33 and we peaked at March about 2.73. And then when we look at September, we were minus 0.52. But when you look at July, August, and September, we definitely dipped down on the home values. But as you can see, July was higher than August, and August was higher than September. So looking at the trend, even the home value hitting, declining it's not coming to a steady decline. In fact, we're kind of coming back up. So that's interesting to see as well. Again, if you have any questions at all, please be sure to put it in the chat. Even if you're watching the replay, please be sure to put your questions in the chat because I definitely want to make sure that they get addressed. So house price appreciation has slowed in all 50 states. We have definitely seen that throughout the United States. In all 50 states, it has slowed. But the deceleration is generally more dramatic in areas, of course, that experience the strongest peak appreciation rates. And we're going to go over that as to what areas experience the strongest appreciation rates. And absolutely, our area in the Prescott area definitely experienced a very high appreciation rate. So the home price movement. So this is the graph that I really wanted you to take a look at and see. So this is throughout different metropolitan areas. And you see some cities highlighted in red. And these are the areas that appreciated the most over the last few years for the pandemic. And now we're seeing that the prices are dropping in that area a little further than those that didn't have a high appreciation rate. So if you take a look at Dallas, Denver, Las Vegas, Phoenix, San Diego, San Francisco, and Seattle, these are the metro areas that are now experiencing the changes in the pricing because these are the areas that saw the highest appreciation rates. So kind of interesting to take a look at that for sure. And this kind of gives you the month over month look in the last couple of months. And this data is really about a month or two old right now, but it gives you a good idea, that the different metro areas, last month, San Diego, there was a difference there, and San Francisco had a pretty big difference as well. And so you're definitely seeing these changes over these metro areas. So as the Federal Reserve continues to move interest rates higher, mortgage financing continues to be more expensive and housing becomes less affordable given the continuing prospects for a challenging macroeconomic environment. Home prices may well continue to weaken. So let's kind of get into that a little bit too. So as home prices weaken, what does that really mean? So this is a chart that I wanted you to look at. So yes, prices are depreciating, but what are they depreciating to? So this might help give you a little idea. So if prices drop by a certain percentage, then we're back to a certain year. So for instance, if we drop 5%, if the homes depreciate at 5%, then we're back to February of 2022, earlier this year. So we've gone up about 5% or gone down about 5% from February. And if we drop 10%, then we're back at October of 2021. So just a little over a year ago, that's what the prices would have been, about minus 10% of the market. And so we would be back. So I don't know if you understand, I'm trying to word this, it can get a little confusing, but basically what it's showing you is that if we depreciate in these certain amounts, then we're back to what it was price-wise in the months that it's listed. So we drop 10% in our price, then we're back to October 2021 prices. If we drop 15%, then we're back to June of 2021 prices. If we drop 20%, then we're back to February of 2021. If we drop 25% in our pricing, then we're back to the pandemic price of October 2020. So that should give you a little bit of perspective. Yes, prices are dropping, but we are still currently higher than we were in the pandemic. So most homeowners still have equity in their homes. So again, this breaks it down a little bit more pre and post pandemic. I find this chart very interesting, so I want you to take a look at it to see the difference. So the pre-pandemic is in the blue column, and the post-pandemic is the green column. So if you look down at all of these cities, you can see the difference. And let's go ahead and go to Phoenix, since we are in Arizona. Phoenix, the pre-pandemic was at 19% appreciation. And when the pandemic hit, we shot up 59% in appreciation. Wow. And then take a look at Dallas. Dallas was at 9% in home appreciation, but then jumped up to 51% in appreciation. That's incredible. To the amount of appreciation that had occurred. Those are just picking out those two cities, but as you look at this chart, this is a pretty big difference, as you can see, right? So people who purchased basically during the pandemic, they have built quite a bit of equity just in those few years. And that's unheard of, because if you remember back to that graph that I showed you, the average appreciation prior to the pandemic was only at 3.8% per year. That was the average. So in order to really build enough equity to even think about selling your house, we would be looking at about 5 years. You had to own the house before you could have enough equity to even come out slightly ahead. So these are incredible numbers that the pandemic just helped our homes to appreciate, right? So what are your thoughts? What are your thoughts on all that? Did you know that? Did you know that that the home prices appreciated that much throughout our whole entire country? I mean, that's pretty incredible. So we're going to take a look here at the rising mortgage rates. So of course, we started out very, very low in 2022, right? We started at the beginning of January of this year, and it was low. We were in the threes. And as you can see the chart, we had a steady incline with a few dips, and then incline and few dips. And it looks like when we hit November, we may have peaked, and I am hoping we peaked. I hope we don't go up anymore, but it looks like so far, as we're looking at the trend, it looks like we peaked in November and we're steadily climbing down. So in November, we were above 7%, and now we are kind of going more towards the 6% interest rate. So that's, I think, fantastic news. So here's another chart for you to look at. Mortgage rates continue downward in the trajectory. Just to break it down a little bit, I was letting you know that it looked like we peaked out in November, and there is a steady decline. So we are all hoping that this trend will continue. So just some perspective here. I know that, we pretty much doubled from the beginning of the year, right? So in January, we're at 3%, and now we're ending the year at about 6% mortgage interest rate. So that's double. And we haven't really seen that. That's pretty historical. We haven't really seen that happen in the time frame that we have seen. And so, of course, you know, it has made a lot of people very nervous in purchasing, wondering, if it's a good time to buy or jump into the market. And I just want to give you some perspective that when I purchased my first home back, gosh, I guess it was 1996. I was just 22 years old, just got out of college, and I was able to purchase my first home. And I had pretty decent credit at that time, but my interest rate was at 6.5%. And back then they were doing adjustable rate mortgage, which we may be getting back into seeing more of that as time goes on. But 6.5% for, I think I had like a high 700 credit score at that time. And right now we're lower than that. So just to give you some perspective, and of course, any of you bought a house back in the 80s? Because in the 80s, we were looking in the teens. I mean, 15, 16. I even heard somebody tell me they had an 18% interest rate. And so when they got a 14% interest rate, they thought it was a really good mortgage interest rate. So I just wanted to give you a little perspective on the historical aspects of it. So yes, 6% is much higher than 3%. And it feels like, oh my gosh, we are headed so high. And plus the appreciation in the homes have increased. And of course, inflation, our money doesn't go as far. And so everybody's feeling this crunch. But I just wanted to give you a little perspective on that interest rate and where we're at. So it's anticipated that mortgage rates should pull back next year as inflation pressure eases. And so we're starting to kind of feel the easing of inflation. And so usually, historically, when inflation lightens up, so will the mortgage interest rates. So that is the anticipation for coming into next year, that we are hoping to not get back into the 7% or higher. We're actually hoping to drop back down. Now, will we drop back down to 3%? It's hard to say, but I doubt it. I mean, if you guys think about it, it took a pandemic for us to get to that interest rate, and I just don't really see us coming back down. That was record low back then. So if you were able to refinance, last year and beginning of this year, you got a very good interest rate. So kudos to you if you were able to refinance your home at that time. But I don't really think we're going to see 3% anytime soon. I mean, it took, like I said, a worldwide pandemic to get there. And personally, I don't want to have another worldwide pandemic to get to better interest rates. I'd rather us be moving on and moving forward in a healthy manner. So that's just my 2 cents. So prospective buyers may be tempted to try to time the rates to jump into the market when the rates dip, but timing is so difficult. I always say, I wish I had a crystal ball. Because if we had a crystal ball, we could be able to determine, when's a good time to jump in and when's a good time to jump out. But unfortunately, there's just so many variables, and we just cannot have that foresight to that accuracy. And so waiting for the market rates to dive down, I want to caution you. If you are renting a house, are you renting a house? If that's you, if you are renting a house, you are paying somebody else's mortgage. Granted, maybe they have, their house paid off, but basically, that money doesn't go anywhere for you. You have no savings, you have no equity building. That house belongs to somebody else. And so they are more likely, they are the ones that benefit from any appreciation of the home, not you. And the payments that you make. So let's say you're paying $2,000 a month in rent, which is about what's happening here in our Prescott area. Anywhere from $1,800 to $2,000 a month seems to be pretty average, and some higher. That's $2,000 a month that you're not going to get back. That's basically money down the drain, down the toilet, so to speak. So if you are renting, you've got nothing back. So even purchasing a house, if you can get into a home right now, even at the 6% interest rate, 6.3%, whatever it is, even if it was at 7%, you at least are paying towards something for your future. Does that make sense? You at least are paying towards something that is going to appreciate in value. You stay in the house long enough, no matter what the appreciation percentage is, you stay in the house long enough, you're going to eventually, at least hopefully, even out or make money. We always hope to make money. If you sell at the right time, you certainly will make money. Can you take a loss on a home? Sure. Sometimes we can take a loss, but usually that loss more often than not does not equate to the loss that you have renting for several years on end, on end, on end. Okay. So if you want to talk more about that, I'd love to chat with you about that. But I just want to encourage you that if you qualify for a loan, I honestly would not hesitate right now to jump in. And I know people are like, well, but I want to see the prices come down. Well, the prices may come down. Interest rates may or may not go back up. But at the moment, jumping in and purchasing a house makes more sense than waiting several months and paying somebody else's mortgage and having that money go down the drain, because you're talking thousands of dollars. Rent is not cheap right now. Anybody who's renting knows that, right? It is not cheap. So total home sales, as we take a look here, this is all the way from 1999 to October 2022. So just to kind of give some perspective, our total home sales, of course, we peaked out back in 2006, 2007, right before the crash. And then today we are down. We're down, from last year, of course, and everybody kind of definitely sees that. So we peaked out last year. 2021 was definitely the peak, and we've come down on home sales. So 2023 total home sales forecast, and when you take a look at all the data that is out there, Fannie Mae says we had 4.4 millions. Freddie Mac said 5.1 millions, and MBA says 5.3 millions, and NAR says 5.4 millions. So you average all that data, we're at 5.1 millions on average for total home sale forecast. That's what's forecasted for 2023. Looking at the data that we have had and the trends that we've had, that's what the experts have compiled. Now that 5.1 million may fluctuate depending on the mortgage rate, depending on inflation. All of those play a factor, of course, on whether or not the home sale prices are going to go up. So just a little bit of data for the local market, and I know it's a little bit hard to read, but I did want to show you, what was happening in our local Prescott area market, and you can see that in 2021 the median home price was still lower than the median home price for 2022. So even in 2022, even ending our year here, the home list price is still higher. So even with things that have slowed down and prices have come down, we're still higher than it was last year. So, and then here's a graph that kind of breaks it down a little bit too. And if you guys want any of these slides, just message me and I will certainly get them to you. It is very interesting information. And so anybody that may want the slides, or if you want to share it, just let me know, okay? I'd be glad to share anything I have with you. And then Prescott Valley, kind of same thing, showing the trends. The slide's a little small for me to read from here, but you can see that it's the same trend, that basically in 2021, the home listing price was less, and our price in 2022 is still higher. So just wanted to give you some encouragement that we have not hit rock bottom, and people still have equities in their home. So that is, I think, absolutely great news. So in the upcoming months, we should see a return of buyers as mortgage rates appear to have already peaked and have been coming down. And so another reason why, if you're thinking about buying, honestly, right now is a good time because we're not having the bidding wars because buyers have been shy. We have not seen that crazy activity that we had at the beginning of the year. And so now it's kind of a nice time because buyers have a little bit more negotiation power at the moment. And if the interest rates go down and inflation goes down in 2023 as projected, we could see the buyers coming out and we could end up having bidding wars again in the second and third quarter of the year. And so waiting for that prices to drop and interest rates to drop might not be in your best interest right now. So I do encourage that you talk to your lender about those things because uh, it is probably a good time for you to go ahead and jump in the market when you don't have a ton of competition. You have more negotiation power, and chances are your home is going to appreciate over time. So I think that's great news. And of course, like I said, I wish I had a crystal ball. I don't, but just looking at the trends and just looking at the data and looking at the factual stuff, we may, see. Now, granted, there's always that unknown, I mean, none of us knew that a pandemic was going to happen. So there's always that unknown that can happen. It can change things. But, I'm just know that to not jump in would be unwise, especially planning for some astronomical crazy thing to happen, and you think, I just don't want to be responsible for a mortgage and that sort of thing. I just highly encourage you to not hesitate. Um, that's really not the best reason to not jump in because most people. I just remember, doing real estate in 2018 and 2019. And in this market, people felt like those prices were too high. Do you guys remember that? And especially for those who've lived here for a long time, we thought that 2018, 2019 prices were way high for the area. And yet those that waited to purchase found out that the prices went up even higher. So wishing that they would have bought back in 2018 and 2019. So most investors say that the best time to buy is now. The best time to buy was 20 years ago. The second best time to buy is now. That's what investors generally say. So to give you that perspective. And once the housing market adjusts to the new normal of mortgages, we'll see a strong demographic driven demand again, because we have such a shortage of supply. Once buyers start to feel confident and feel like this is what the normal is, we are going to see more buyers coming back out. And we still have the issue of supply shortage. Because as I went over earlier, we're low on new buildings of homes, and we're just low on inventory overall compared to the amount of buyers that are out there that are really looking to buy homes. So we do know those things. So keep those things in mind as you are making decisions. And from our perspective, this is good news that this remains favorable in the housing as time goes on. So if we can weather this storm just a little bit, it's probably going to be a brief recession is what it looks like. It doesn't seem like this is going to be a very long drawn out recession like it was in 2008. So to sum it up, with the headline saying that this is exactly the same circumstances of 2008, I'm kind of wondering if people writing that just weren't even very old in 2008. Maybe they were babies when they were 2008 and they're writing these articles because they don't remember. But I just want to remind you that this is nothing like 2008 whatsoever. Even the most bleakest and dire things that we think we're seeing, it's nowhere near 2008. So want to encourage you in that. And so absolutely, if you have any questions at all, please um, please shout out and give me a comment. I mean, let me know what your thoughts are on all this. And if you want to talk about, what is your house really worth, contact us. We would love to do a free home valuation for you. So get a hold of us and we will certainly get a free home valuation for you. No obligation, of course. Just want to get information out there. And if you have any questions about, whether you should get in and purchase, please, by all means, please do so. Contact us, and I'd love to have a conversation with you. Chris and I, we work as a team, and we love to service our clients and those who just are wanting more information. So, okay, well, thank you for joining me. Thank you for watching to the very end. I know that was a lot of information, but I wanted to make sure that you got that information as we are ending 2022 and jumping into 2023. And want to say Happy New Year to you all. Be blessed and be prosperous, be healthy. It's going to be a great 2023. I just know it. So, anyways, I hope to be in touch with you soon. And I'm going to make sure we have some guests that come on and give you some insights and speak to some of our local experts and get you to stay informed and educated, because I do feel like a lot of times our mainstream news media does not really portray things the way it should be. So, Happy New Year, and I will see you in the new year. And we will have some great content for you and some great guest appearances. So, I I just want to say, well, I just want to say, gosh. I want to say that I really appreciate all of you. I just drew a blank for some reason. Sorry, guys. When the camera's on and stuff, I haven't done a lot of live, um, so I'm really nervous. Anyways, I just want to say how much I appreciate you all. And if you're our past clients or current clients, I shouldn't say past clients because you are our clients. But we really appreciate all of your support. We appreciate your referrals, and we appreciate you trusting in us. And we do stay on top of our current information so that we can pass that on to you. And we do take pride in being the experts in our market here. So, all right, take care for now. Happy New Year, and I will see you next year. Oh, I'll say Happy New Year in Vietnamese too. Chúc mừng năm mới. Okay, chúc mừng năm mới. Happy New Year.